Hey, Dustin, episode
Hello,
24.
Hamid.
I'm excited for this
24.
one.
I unfortunately I didn't buy any cars this week, so I have no exciting news to report.
But there's tons of companies reporting
Yes,
Meta,
that's true.
Microsoft, Tesla, three big ones, or ASML too, right?
Reported this morning, yeah. And
Um,
United Health reported yesterday. We'll talk about that.
Very
Um,
cool.
and then there's updates with your the stocks in your portfolio. There's some issues with Rocket Lab in regards to their testing with the uh, tank pressure, I think.
Yeah, yeah.
Uh,
We'll talk about that.
yeah, we're going to talk about Micron, of course. I think
It's a given. We have to talk about
we
Micron. I
have to
mean, at
talk
this
about
point, it's
Micron.
like it's the superstar.
um,
It's the
and
Michael Jordan of stocks right now.
and you had a very popular tweet or a tweet that kind of went viral about your portfolio versus Tesla. So I wanted to talk about
Oh,
that as well.
yeah, yeah.
Um,
All
so
right,
and
sneaking up
obviously
agenda items on me. That's good. All right.
it was in the list. I
Well, oh,
maybe didn't
I never even connected it the way it was worded in the list.
right. I
Okay,
didn't
but
specifically say your viral Twitter post. I mean, you so quickly forget. Um, okay, where do you want to start?
um, should we talk about copper? Because that's been a
Let's do
recent
copper.
topic that has come up.
This is something I know nothing about, so you're gonna have to
Okay, let me ask you
teach
something.
me.
Have you heard copper in the past couple of weeks coming up?
Yes, but I've been hearing more about gold and silver.
Okay, we started hearing about gold and silver the past couple of weeks, and then all of a sudden, copper just became like top of mind. And all of a sudden, I started seeing videos on X about copper, the references to the S&P Global report of the copper shortage, and then Chamath on the All In podcast started talking about how copper is the big winner of 2026. That was his sort of like major prediction for 2026, that copper is going to be this thing. And I was thinking to myself, Chamath has probably one of the most dismal public track records of what he says versus what he's actually doing. He might be shorting copper at this point. You never know with that guy. It's so
If
funny
only he
because
had a savvy trader portfolio.
that's right. Only if he was a little bit more transparent about what he was doing, because he's been known to pump his SPACs while at the same time selling the same stocks that he was pumping. But um, what's funny is that even Jason sort of makes fun of him on the show, which is a great show, by the way. The All In Pod. I listened to
Yeah,
that
I agree.
podcast, and despite Jamal, by the way, is my least favorite person on the show. But despite uh, him, it's a good show. But Jason makes fun of Chamath for his integrity. So one of his best friends is pretty clear that he sort of lacks a little bit of integrity there, which is kind of ironic. But anyway, moving back to copper, um, which is sort of like an interesting topic. I actually have some stuff to show. Let's see. They So there's a report by the S&P Global, and I saw this chart, which I found super interesting. I don't know if you can. Are you looking at the chart right
Yeah,
now?
yeah, yeah. That's
Okay.
coming up.
Okay, perfect. So this chart basically shows in blue the copper expected demand according to the S&P Global, and then I'm sorry, the demand is in blue and the red is the supply. And what's funny is that you can kind of see that the blue and the red kind of go hand in hand in a linear growth curve. So it's like roughly 3% annually, all the way to 2030. But then they anticipate that in 2030, which is like 4 or 5 years from now, all of a sudden, that's going to be the peak of copper production. And then copper is going to flat out and then even go down as much as like 10 years from now, as if they can predict that far in advance. And then and by 2040, there's going to be this massive gap in demand versus supply. And by the way, the supply is not going up in a exponential way. It's just like roughly 3%. It just remains 3% global demand growth, which is basically a straight line. It's not crazy
And
growth all of a sudden. This is not
what's
like the memory shortage growth or something like that, right?
what's the
This is
cause for the demand?
The demand is just like it's been going up 3% every year annually for like the previous 10 years too. It's just it just the prediction here is that the supply is suddenly going to stop in 2030. And that just got me thinking, is that like what are some of the other predictions that S&P Global has made? Do you remember a few years ago that they made predictions that because of EV vehicles, battery, um, the stuff that goes into batteries like lithium and nickel and zinc and all these other minerals were going to be like in major demand, and there's going to be supply shortages worldwide.
Mm-hmm.
And that they predicted that like roughly 5 years ago, 4 or 5 years ago, and none of that came to fruition, by the way. So prices sort of like had this sort of interesting blip and then went back down. But this graph in particular just had me kind of like amused, because then I did a little bit more research on Grok about like copper, and then I saw that, for example, the 50% of the global production of copper comes from Chile, number one, Congo, number two, and Peru, number three. US is not until number six, and we only produce 5% of copper. And one of the reasons that they said that copper supply was going to be in major short supply is because of environmental reasons and like getting licensing approvals and things that are very American oriented. You know, some of these issues are not as big of issues in some of these other countries. I don't think Congo has the same kind of levels of environmental or licensing issues that the US has. So 50% of global copper supply comes from these three countries. And if these three countries decided to increase their supply by simply 6% annually, that would address the entire global supply or global demand requirements over the next 15 years, right?
Mm-hmm.
So, you know, like this is one of those things that, by the way, this is not my wheelhouse. I know nothing about it. I don't invest in rare earth minerals in any by any means. So all these experts are probably right, and you should never be taking advice from me. But like when I hear everybody and their mother jumping into a particular thing, such as copper, all of a sudden, in the matter of 2 weeks, going from like nobody being interested in copper 2 weeks ago to all of a sudden everybody wanting to buy copper, it just makes me chuckle. And I'm like, I have zero FOMO. Copper could quadruple in price over the next day, and I would not give one iota of a care if that happens, because I would have no idea when to sell, when the hype is over. I'm not going to buy something because of hype. I want to know that, like, I personally think that the demand supply curve makes sense, and it's a product, and it's a company, and it's US based, and like all of these things that sort of make an investment wise from my perspective. So the answer to copper and whether or not I'm buying copper is no. I've been asked that question so many times in the past week. It was just shocking. It just came out of nowhere, but from multiple different people. Um, anyway, so that's my little copper rant.
I guess this is why America stopped producing the penny. They needed to save their
Yeah,
copper.
that's right. There's people who are like literally buying pennies in the hopes that they can like melt it down and sell the copper someday. It's just like, okay. Every penny
And
might be worth like 2 or 3 pennies down the road. So you never know.
it's and it seems like it's not just copper. A lot of these metals are hitting all-time
All-time
highs, like
highs.
silver and gold. What are your thoughts about like this general metal movement?
Yeah, I don't know the reason for silver. The reason for gold feels like it's always the Armageddon story, right? As everything moves closer and closer to Armageddon, gold and Bitcoin should be moving up in general. And Bitcoin hasn't had the greatest 1 year, but prior to that, that was sort of like the story. The Armageddon story is very strong with pro Bitcoin and pro gold people. And again, I don't buy either one of those two products from an investment perspective. I have some Bitcoin. I think Bitcoin is the smarter gold. Um, and yeah, I don't have any gold. So yeah,
So
that's my perspective on those.
let's talk about what you do have, Rocket Lab.
Yeah.
They had a tank pressure test failure. This is potentially going to set back their launch for, was it Neutron, Electron?
Neutron. Electron
Neutron.
is the current rocket, the
I
smaller
can
rocket.
never remember.
Yeah,
Shows you how well I
Neutron.
did in science. So yeah, tell us what happened. Is it going to cause delays? Is this going to be a problem?
Yeah, so obviously in any kind of a rocket program, there's so many different components. Every component has to be extremely tested and tested to extreme conditions. The tank, the pressurized tank, for which I think is the main fuel tank, although they didn't clearly say that it was the fuel tank, for the Neutron rocket was being pressurized tested, and it seems like they kind of implied that it didn't. It sort of the test failed before they pushed it to its limits, right? Because they sometimes push things to their limits just to see, like, we expect it to fail. Let's see how much it can handle. But in
Right.
this case, I think they hadn't gone above the limits that they were hoping that it would be able to handle. So
Yeah, it was not an
almost
expected
certainly
failure.
it did seem like an unexpected failure. And they said they were going to sort of provide more context about it in their Q4 earnings call, which happens in February. But fundamentally, like, it doesn't change the story for me, right? Rocket Lab is a very strong company that has a very bright future, and even if there's like a couple month delay because for Neutron because of some test failure, it doesn't change anything. So I didn't like make any moves as a result of that test failure, but I was asked, why not sell some and just wait until the dust settles and then buy it back or whatever at a
Mhm.
lower price. And my answer to that question was that these things are so unpredictable that I have no idea. So I put together actually another chart. So this is the price chart for the past week for Rocket Lab, and this is where the test failure happened. This is last Wednesday when we were doing the show. I think their test failure happened on Wednesday. So Wednesday's close was unaffected by the test failure. The next day, it opened down something like 10%. But by the end of the day, it had already recovered. So this is the unpredictability of the market. You have no idea what the market is going to do just because of a test failure. And in fact, the following day, on Friday, it went up and made I don't think this is new all-time highs, but it reached close to its all-time highs. And then the weekend happened, or actually, this was the end of day two. So this was sort of like midday, second day. End of day two, it had already sort of like closed at a higher price than when the test failure had happened. But then the weekend happened, and then on Monday, it opened down pretty significantly and went down as much as 10%. So this is the end of Monday. And then yesterday and today, it has pretty much recovered and is higher than, again, when the test failure happened. So this just basically goes to show you the unpredictability of these things, and that, like, I'm not a short-term investor. I'm not going to buy and sell based on how it potentially moves in a particular few moments because of a test failure or even a month or two delay. If they came out and said Neutron is getting pushed back to 2027 for some reason, that would be a reasonable, like, reason to be like concerned that, okay, well, wait a second. These guys have been saying for a long time that it was going to happen in second half of 2025 and then the first half of 2026. And now if they're pushing it back by a year at the beginning of the year in 2026, then we're in trouble. So that would be one thing, which they're not doing. And then the second thing that I love about Rocket Lab is that 70% of their business is not even their launch business. 70% of their business comes from satellites and satellite technologies, which is growing super fast. So I want to wait until their quarterly report to see, before I do anything, to see, like, uh, how do they do, first of all, and what do they predict? Because they're getting contracts left and right that are adding to their backlog. So Rocket Lab continues to be a company that I'm excited about and don't expect to do any moves in the short term unless it hits new all-time highs. I might trim a little bit. That's always a sort of like a
Right.
de-risking strategy of mine. But yeah.
And what's your expectation when they finally do a Neutron launch? Is it going to be similar to SpaceX, where it's probably going to have some sort of failure then too, but that's part of the process? Or are you expecting a successful first flight?
That's a great question. And what's cool about that is that Peter Beck has already answered that question. So Elon also answered that question about Starship, which he set out the expectation that, hey, we're going to fly this thing as often as possible and fail quickly and iterate fast and learn as we go. So Elon set the expectation that Starship was going to have all these blowups happen and it's going to be spectacular, just, like
And
come
it
along
was.
for the ride. And it has had multiple blowups, but I feel like the media sort of misses these details.
Yes,
So
totally. Well,
the
actually, I don't even think they missed the details. I think they full know that, like, this is supposed to happen, and then they're, like, just,
yeah,
twisting the
it's
news.
it's
Um,
hard to tell if they're incompetent or there's a conspiracy going on. but
yeah.
but in Peter Beck's by the way, Steve Jobs has a great quote. Sidetrack here, but uh, his quote was something to the effect of, it's hard to tell the difference between incompetence and conspiracy, but usually it's incompetence. Anyway, uh, but going back to Neutron and Peter Beck, he set the expectation that he fully expects the very first test launch of Neutron to actually make orbit. And the second launch of Neutron is expected to actually take satellites to orbit. So this is not a situation where Rocket Lab expects to have 2 or 3 or 4 failures. If they have a failed first test launch, I think that would be a somewhat of a setback and not a good thing. So, the stock is a high risk stock. So don't get me wrong, but like I'm in this thing for the long term, and I de-risk by when it hits new highs. I'm de-risking a little bit at a time, but in the long term, if we fast forward 5 years from now, Rocket Lab is in a fantastic shape. 10 years from now, it's in an incredible shape. So that's the perspective I always try to keep on it.
This reminds me a lot of releasing software as we do, every week. When we strive for perfection, it could delay the release of the
Right.
software as opposed to just kind of releasing quickly and fixing quickly. Do you think by Rocket Lab striving for a perfect first launch that it's going to significantly delay that launch and there's potentially more failures on ground ahead?
My style is probably more aligned with Elon's, where it's like let's fail frequently and learn and iterate and move fast. But uh, with Rocket Lab, it sort of might not have the same luxury, or may not have had the same luxury of being able to fail a bunch of times because of financial constraints when
Mhm.
they were starting the Neutron program. So this company just 2 years ago, when the Neutron program was already well underway, was only a $2 billion company. Don't forget, today it's over a $40 billion company market cap. And if it wanted to raise another billion, it would be only a 2.5% um,
Dilution.
dilution for the entire shareholder base. Whereas if it raised $1 billion 2 years ago, it would have been a 40-50% dilution for the shareholder base. So it didn't have the luxury of being able to iterate quickly and failing frequently as a way to sort of accelerate its timeline. And therefore, they had to sort of like re, uh, do it Peter Beck style, which is that we're not going to produce something that doesn't work right off the bat. So,
Okay, let's move to Micron.
okay.
Originally, I was gonna ask, now that Micron is 10% of your portfolio because it's grown so much, do you plan on, uh, not allocating any new capital to the
To
stock?
Micron?
But it's actually moved up so much that it's already hit 11% of your portfolio. So, the question still stands though. Are you kind of holding back now, or are you gonna continue to invest?
I was just looking at that clip where I said I'm probably going to kick myself for not having bought as much after doing the math, and it's like
Yep.
I should have doubled my position at that point in time. So I am still kicking myself because that's one of the ones that I did the math, and obviously, like I'm still skeptical of my own math, but
Right.
also they need to deliver, right? They have this incredible growth, quarter to quarter growth, which is unprecedented, going from record revenues of 13 billion to record revenue projections of 18.7 billion this quarter. That still needs to happen, right? And there's a chance that they miss that somehow. They still have record revenues of 14 or 15 billion, but it doesn't come all the way up to 18. And 14, 15 billion would be good, not great. So, maybe the stock goes down, and depending on the reasons why, like there might be opportunities to buy in the future, but if they beat that 18 billion, I may have lost my opportunity to buy more. And I'll just continue to kick myself along the way. But, I'll be happy that I bought as much as I did, as quickly as
Right.
I did when I ended up pulling the trigger on it and end of last year.
Let's talk about the viral tweet, the tweet heard around the world, where you compared your portfolio to Tesla, right?
Yeah. But
S-
what about
well, even though it went totally viral, and by viral I mean it has over 100,000 views. I think it would be good to break down kind of the sentiment of that post here.
Well, okay, so let's for people who don't know, and I'm sharing my screen as well. So
Oh, I'm
if you
sharing
want
my
to see
screen too.
um, the tweet that you're talking about, so for people who don't know, X is sort of like a battleground of ideas. When you say something on X, people jump on your throat, and that's just part of like the way things go on X. It's just the culture of X or Twitter in general, and has been. It's not since Elon has taken it over, um, but it's where when you say something is great, somebody else will say you're an idiot and it's not so great, and da 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 da. But over time, some of those things come to light, and one person will be right, and another one will be wrong, and the people in the wrong never come back and admit and apologize, right? So the people in the right often point back and and say, hey, I've been called an idiot for this or predicting this, and here's some proof that I may have not been as dumb as you might have thought. Now I'm plenty dumb. Don't get me wrong, but that particular tweet was for all the Tesla people who Tesla Uber bulls or perma bulls as they call them, that considered me an idiot for the past 4 years for saying that Tesla may have gotten overhyped and gotten ahead of its skis in terms of price. And even currently, I think Tesla is a little overpriced. Um, well, it turns out that at least for the past 4 years, I have been right, at least relative to my portfolio's performance. So that compares my portfolio's performance to uh, the Tesla stock performance, and that was just sort of like an "I told you so" type of tweet. Not the most proud tweet, I would say, but it's kind of funny that that happened to go super viral
Yeah.
for my account anyway.
Let's stick on Tesla. Tesla just released their earnings and fairly
That's great.
positive. Revenue basically met expectations, but
Okay,
EPS surpassed expectations by 25%. And the stock
nice.
is up after hours a little over 2%.
Okay, very cool. Go
Um,
to the info tab. Let's see what. Go to the
we will
one
see.
day so we can see that sort of after hours. Is it jumping a lot? Oh, it's like a
Yeah.
definitive uptick.
Yeah.
Very nice.
I mean, and with that
The
said, obviously it changes like as they, do the call and whatnot, but the initial reaction is positive.
Yeah, that's a good initial reaction for Tesla. I mean, first of all, one thing that I should probably clarify on Tesla is that I'm a huge fan. I'm a customer. In general, I never want any company to fail. So and much less so a company as important and as wonderful as I think Tesla is as a company and the products that they produce. So I'm a fan of Tesla. I want them to succeed. So I'm not rooting for them to fail by any means. I just think there's better investment opportunities out there. So that's my view on Tesla. And we'll come back to deeper dive on Tesla maybe next week on their as we get a chance to go over their sort of financial details. Has Microsoft or Meta reported yet?
Yep, everyone's reported. So let's go to Microsoft, and you could see Microsoft is down right now.
3%.
3.5%. Their earnings, though, were also positive. Revenue beat by 1%, 1.5%. EPS beat by over 7%. So
that's a pretty good EPS beat. That's impressive. I wonder why it's down.
Yeah, I'm not sure if the market was expecting a larger beat or not. I feel like for Tesla, the reason why it's up is the market was kind of embracing or bracing for more negative news, because deliveries have slowed down. But yeah, I'm not sure why Microsoft had that reaction. For Meta, also positive earnings, revenue beat by over 2%, EPS beat by roughly 8.5%.
Okay,
and they
$8.88 a share of profits. That's pretty incredible.
A lot of eights. That's that. You know what that reminds me of?
Yeah, 18,888.
Yeah, that's exactly right. And
we passed that many subscribers, by the way, on the Buy Hold Rant podcast YouTube channel just the other day. So now we're over 21,000, but that was a fun little number that I had posted.
Yeah.
Anyway.
And Meta is up 4.74%.
There we go. That's my boy.
Oh, and you could actually see it initially went down.
It dropped initially. Interesting.
Yeah.
Yeah, but like Meta's price did not make sense whatsoever for it to be under $700. And it literally, is it over 700 now in after hours?
It's 701. Yeah.
But
barely.
But honestly, like no one can really explain to me why Meta should be less than Microsoft, Google, Amazon, Apple PE ratios, right? This company is growing faster than all of those companies, and its PE is in the low 20s versus the low 30s. So Meta really seems like it should be $1,000 stock. So why it's not $1,000 stock, I don't fully understand. I think people think that Mark Zuckerberg is wasting money, but let's say you thought that that was the case. They're making the profits that they're making despite him wasting money. So that means they could be even more profitable if he just stops the waste at any time. And I think he just announced 10% layoffs in the augmented reality division.
Yeah.
So
they're being a bit
canceled a bunch of projects. So like they're just going to become more profitable. And he's put together a pretty awesome AI team that hasn't yet released a product. So we don't even know what kind of potential those products might have. They're growing faster on their existing product line, and they're producing incredible profits from it. So from a price earnings perspective, it just does not make sense why it's so cheap.
And waste is really framing, right? Like it's not that they're wasting money; they're doing R&D, investing in the company. Because I think the POV, or at least my POV, is the social network business is not going to be around forever. I don't think it's a sustainable business.
You think so?
Yeah, for sure.
Okay, well, no, let's talk about that actually. Why do you think that?
Because I think too often, for too many people, you go on a social platform, regardless of what it is, Instagram, Facebook, X, and you leave that platform feeling worse for whatever reason. Now, people continue to come back, right? Like I always come back, you always come back. But eventually, you're not going to come back because it's right. Like it's net negative.
As I was growing up, people used to say that about TV. They were like, you watch TV, it's a waste of time, and like you don't feel good afterwards. And technically they were right. It just like never materialized to where people stopped watching TV. Like it's just.
But is TV a strong business?
Well, yeah, of course. I mean, like basically, entertainment on some kind of screen is what TV is, right? Like, so now the equivalent to TV is social media and 10-second clips, but it's all video and entertainment that is passive, meaning you're just sitting there and watching something or digesting something.
Right. I think there's going so if the argument is there's value in entertainment, I agree with that, and I don't think social media is going to be effective entertainment in the future, and it
But
could
what
easily be
makes you say
surpassed.
that though? Like all the numbers are in the positive direction.
Uh, my, what's making me say that is my personal perspective, right? And that's how
Yeah.
I think you invest as well, right? Like if you have a negative experience with a product, you're going to be less inclined to invest in that product, even if it's not a widespread belief, or even if the numbers kind of go against that, right?
100%.
So
That
if
is how I
and
invest. So, but
and it's not
keep
just
going,
me,
and then
right?
I have
It's
a response.
everyone I talk to, like I see it, like they go on Instagram, they see some reels they don't like, and then or X, and they see a post they disagree with, they get pissed off, they close the app and they feel worse. And they'll still go back on, right? But like it's not sustainable. There's no way. And I don't see these apps changing. The benefit that I do see
Okay.
is the news side of things, which is more of an X thing than a Facebook thing, in my opinion. What were you
Okay,
gonna say?
so what I was going to say is that that aspect of things like people getting pissed off and then getting off the app, and then that has been true for at least 10 years, and they're spending more and more time on it each year. So they have just not stopped. Like, and I guess what my question to you would be is, what makes you think that they will stop suddenly at some point in the future?
Because I think the consumer is eventually going to be smarter and realize, oh, this is bad for me. Kind of similar to like cigarettes, which is an extreme example, right? But it's like
Yeah.
cigarettes were extremely popular, and then eventually people realized how much damage it was doing.
Yeah, but
And
okay, the damage in this particular case though is not as easily attributable. And then what I would say is that I might be boxed in by my past experience and just being older. This is why like older people don't make cool stuff. By the way, this is because
don't
they
be
have
ageist, Hamid.
they have but they have their past experience. I just remember all of these arguments being true for TV in general, and none of that came to be. Came about. It just people's consumption of TV and entertainment just increased over time. But
Right,
people
but
made the same arguments.
I would assume with the TV argument, it was mainly about news, not about TV shows.
No, TV shows, just
No?
the amount
TV
of time
shows?
your kids spent on TV in general. Like, because
Oh,
as
gotcha.
growing up as a kid, you'd sit there and watch Saturday morning cartoons or whatever, like Saturday morning cartoons are not a thing anymore, but it was when I was a kid.
I wish it
Um,
was. I love Saturday morning cartoons. Ugh.
but like, or I'd come home from school, sit in front of TV and watch Brady Bunch or whatever. It was just the TV was the bad guy, and today is social media is the bad guy, right? So um, the direct correlation like of TV killing me has not happened yet, and therefore, and neither with social media. Like we kind of collectively know that it's probably not a productive thing for us to be spending time on social media or watching TV or entertainment in general. It's a very luxurious thing, luxurious way of spending your time, which only rich nations really have the, or like uh, yeah, rich nations, first world nations have the luxury of being able to do. But it's not as direct of a correlation between like cigarettes and cancer.
Right, right, which, is not exactly
Yeah.
what I was saying. It was more just like there's an element of hindsight and the consumer getting smarter and realizing, that they should be changing behaviors. But I do wanna go back to my original point, which is I think Mark and Meta as a whole is on my side of things, which is
Oh,
why they are expanding into different categories being, VR and AI. And by the way, they've definitely seen this type of migration, but it's going from one product to another, where they lost a lot of Facebook users for Instagram.
Right.
Um,
Right.
so they know it's possible, and maybe social network will be around forever, but it doesn't necessarily mean they will be the kings of it. Um,
Yeah,
so
his speculation is that the AR glasses is what's the next iteration and wants to be on top of that. That makes sense. And I agree with you. And therefore, they're spending a lot of money on R&D. We did get off track a little bit there, but like fundamentally, I think Meta is in a strong position because I don't think people are going to go off of the social media apps, and they're making huge investments in the future. So I like this company from the standpoint of investment and
right,
valuation.
I like the company too. I'm invested in them. I would not invest in them if they weren't doing the waste in
Okay.
VR and AI. Like
So
that,
you
for me,
actually, your view on it is that it's a productive R&D
correct.
spend, and that's my
Right.
view on it as well.
Yes, and the social business is still good, like, it's extremely profitable. I
Yeah.
just think there needs to be a game plan for, like, what's next, and they're doing
Yeah.
that, so I like how they're operating.
Yep. Yeah. All right.
Um,
What else we
okay,
got?
let's go to this morning. ASML reported,
How did they do?
um, let's see, a bit more mixed. Revenue was up a little under 2%, EPS was down almost 5%. But
Okay.
then, their guidance for next quarter was negative. The expectation
Ooh.
was that they were gonna have, 10.24 billion in revenue, and they're saying it's gonna be closer to 9.5 billion.
Okay.
And the price move, I think, yeah, they went down, a little over 2% today,
Okay.
and
Interesting.
again, they reported this morning. Um
And then we had United, right?
Yeah, I wanted to talk about United Health specifically because I know this is one that where people are constantly asking in your savvy trader community what your thoughts are on them. So their earnings fairly flat. Their revenue missed by 0.3%. Their EPS beat by a half of a percent. But the move was pretty substantial. After earnings, they were down almost 20%.
Mm.
But today they were up 4%. So they're making some of that back. But what are your thoughts on United? A lot of people are saying it's very undervalued.
Go to the price chart real quick, for the past 6 months, because it got, I think it was what in the 250s, and then I forget if it was in the 250s still when Warren Buffett invested, but then it shot up to like 300. And then lots of people started being super bullish on United and went all the way up to 350. The time that I was getting asked about it the most was in the low 300s. And isn't this sort of like in line with the type of company that you buy where it's like undervalued and so on? And my responses to those posts was always that, um, no, I don't like their product. I'm a customer and I hate their product.
Right.
Their financials don't look extremely attractive. If we pull up their financials one more time, what is their like PE and growth rate? So
There you
they have
go.
a price earnings ratio of 18, which is not bad, but it's in the healthcare industry. So healthcare is not the same as tech. A PE of 18 is not necessarily a low PE, and a growth rate of 11%. So it's not a fast growing company. And EPS is actually down 41%. So their profits are in the negative trajectory. Revenue is growing 11%, which is basically premium hikes, and which everybody hates. Um, and financials are not that great, and that's despite a 20% drop just recently, right? So, um, the stock price is only 294 6 months later, and yeah, I'm still uninterested. I was uninterested at 250, uninterested at 300. 360, which is where it hit eventually, and then now back to down to 300. Um, I'm just not crazy about a company who's hated universally, pretty much. One of its CEOs got shot. Its new CEO was under investigation. Yeah, so not my cup of tea.
Before we get to listener questions, I did want to bring up a listener question that we missed in a previous episode. Someone asked, when do you start trimming positions? I thought that was a good
Yeah,
topic.
that's a great question. So I usually start trimming positions when I think that a company has come in line with where I think the valuation should be or exceeded it. One of the things that I've learned is to trim slower than I want to, because oftentimes the pendulum swings even in the positive direction a lot further than I think that it's going to. Um, so I've slowed down on the rate at which I trim. I used to think, okay, this company is now overvalued. I'm going to exit the position, and it, oftentimes would run up 2 or 3 times more than where I exited it. And I would always be like, ugh, if I had just kept it longer. So now I'm like trimming slower. But, to provide some examples, I mean, I've been trimming Rocket Lab for more than a year now, or Robinhood. But in all cases, it's sort of like, went way beyond the previous high that it has made. So if I had just held on to all of it, I would have probably been much better off. But I do feel like those companies are currently overvalued for where their current performance are. And that's the way that I find that I can satisfy myself, is that I start trimming when it starts to get a little overvalued, and more if it gets more overvalued, and then but doing it slower than I would have done historically. So I don't know if that fully answers it. Is that a satisfying answer, or
I
what do you
think
think?
so, but I'm not the
Yeah.
one that technically asked the question. I thought the route you did take it a different way than I thought you would. I thought it
Okay.
was going to be more about when it hits a certain allocation in your portfolio, that's when you start
Yeah.
trimming. But
It's sometimes that's true, not always, right? So, in some cases, when one thing is a huge percentage of the portfolio, then it does become kind of scary, especially if you also think it's overvalued, right? Because then it's like, all right, now if it halved or something, that is a pretty significant hit on the portfolio. So, um, but yeah,
okay,
should
let's
we
get to
jump on to?
listener questions. Yeah.
Let's do it.
Hey
Adrian,
guys.
hey, hey, how are
Hello.
you?
I'm good. Thanks for letting me join.
Yeah.
um, okay, we've got some great questions. Let's just dive in. The first one, someone wanted to know about Robinhood. Sorry, people are okay. There's a very active chat going on. So
Love it.
thank you both for doing this. Could you discuss Robinhood from long and short term perspective? Thanks again.
Yeah. Dustin, why don't you start on your thoughts on Robinhood, and then I'll share mine
Okay.
as well.
Okay. This is another one where we differ. We both own Robinhood. Both long term, we are bullish. In the short term, I am more concerned only because I think crypto is going into a bit of a bear market, and Robinhood tends to be correlated to Bitcoin and other cryptocurrencies. So I'm just a bit hesitant from that perspective. But from an operations perspective and a product perspective, I think they're completely thriving. So it's just a matter of when are they going to decorrelate, because they shouldn't really be that correlated. The businesses don't overlap that much. It's just, when is the market going to realize that? And unfortunately, or fortunately, depending on how you look at it, the market isn't perfectly efficient. So it sometimes takes a bit of time for that to happen.
Yeah, so I'll take the other side of that, which is that I think Robinhood has been knocking it out of the park from a product and execution standpoint. And one of their latest products, which is this sort of betting markets, prediction markets,
Prediction
rather.
markets, prediction. It's not betting, it's prediction.
Yes,
All the marketing.
gambling. But which I absolutely hate, and I kind of wish that they hadn't done. they have executed it pretty well, and it's going gangbusters for them. And I think they're just going to have a blowout quarter because of it. And if I was to speculate, and this is not at all like something that I'm trading on even personally, but my speculation is that they're going to have a huge beat on their Q4 earnings. And I don't think that they're as correlated as Dustin thinks between crypto and Robinhood. But they have struggled for the past few months, possibly because some people think it's correlated. And as Bitcoin and other things have come down, Robinhood's price has taken a hit. But I think they're probably those people I think are overestimating the amount of revenue that Robinhood gets from crypto. Whereas I think they're correct in that speculation for a company like Coinbase, but not a company like Robinhood. So that's my take on it. But I'm still bullish on the company. I might trim more, largely because I'm not like big on gambling. I kind of wish they would stay in their sort of financial lane, but we'll see. But,
you ready to move
I probably
on?
won't trim at these prices, by the way. Just yeah, let's go on to the next question.
Okay, we haven't talked much about Rivian today, so let's dive in. With the R2 dropping this year, are Q3 or Q4 earnings expected to see a significant jump in revenue? Thanks.
So the likelihood that Q3 and Q4 would have significant, or Q3 in particular would have significant revenue growth is low. Well, actually, I take that back. Depends what you mean by significant. It will largely depend on whether or not they can scale it quickly. And I wish we had a date on when in the first half of 2026 they're going to release. Like if they were going to release in April or late March or something like that, I would say yes, Q3 they should have a pretty decent number, and Q4 for sure they should have a decent number because they should be able to scale by then a decent volume of sales. But because the growth curve of or the scaling curve is super slow but exponential, it's like this S curve that occurs in manufacturing, where initially the quantities that will be produced will be very small, but that will grow exponentially over time. It might not have as much of an effect on Q3 numbers if they don't release until June, right? So that would be the potential pain there. But Rivian in general, I know a lot of people, I've been seeing sort of like the comments on X, a lot of people are losing patience. And what's interesting is that patience is probably the hardest part of investing. Like basically you're putting money into something and waiting some period of time and hoping to take more money out, right? And during this time that you're waiting, this the fluctuations can be super frustrating, and oftentimes you look at other things that are just like on this like very rapid growth curve. So what you have to realize when investing is that not everything goes on this sort of like rapid rocket ship immediate growth, and you have to wait out the thesis that you had as to why you invested in the first place. So in my case, my thesis for Rivian has been that the R2 is going to be a best-selling product, and they're going to be able to sell every vehicle that they can make, and their manufacturing capacity is only going to be 200,000 a year starting next year. So I think they're going to sell all of those vehicles. And B, the Rivian as a technology company is way undervalued for the types of technologies that is unique in the car industry. And the combination of those two things, having vehicles that people love that is going to scale very rapidly over the course of the next few years, and technology that nobody else has except for Tesla, is a great combination, which I think is going to play out extremely well for them over the next 5 years. Now, when in those next 5 years, it turns out that the stock price starts to reflect that thesis is hard to sort of predict. And until they're shipping in volume R2, and until they they become a profitable company, we might see a lot more fluctuation. And markets can be very irrational sometimes in the short term. I would not be shocked if we saw new lows, 52-week lows of Rivian in the meantime. But also, I would not be shocked if we saw new 52-week highs, because other investors might see the things that I'm seeing and get excited and come in, just, as we saw new 52-week highs in the past month and a half, right? So both of those things are possibilities. And this is the sort of joy of investing. And, patience is hard, but you gotta learn to be patient, I guess, is my view on it. And I've learned that lesson.
Doing some very basic technical analysis on Rivian, which Hamid, I know you don't love. The current price that Rivian's at is an interesting one because this range has roughly been historical resistance, where it hasn't been able to break through. It broke through, got to around $20 after the Autonomy Day event, and now we're back down here. So what I'm curious about in the short term is this price point going to become support? Because often previous resistance does become support, or are we going to break down further, like you mentioned, where we could easily go back to a 52-week low?
Well, if technical analysis had any weighing, you should be able to tell us that based on the technical analysis.
The way I view technical analysis is not that it's telling you anything with 100% certainty, but it's mapping out probabilities. So you could have a better sense of like where something can go, or the likelihood of where it can go. And I do think that those probabilities are less useful if the price is going into unknown territory, meaning if it's going into all-time highs, kind of like Moo or Micron, you can like do some wizardry around it.
Yeah.
I buy less into, but if you're looking at historical price action, I think it could give you a sense of
I love
where price can go.
statistics and probability, because 87.6% of all statistics are made up. So
Wonderful.
yeah. People's
Thank you for
reactions to
that.
that is often, including that one? Yes, duh. Of course, including that one. Anyway, let's go on to the next question.
Okay, going back to United Healthcare, should a company like United Health be allowed to be public? Morally, it seems like people are trying to make money on a company that is forced to price gouge patients because of Obamacare's 15% margin cap.
I don't know where the moral compass lies on that, but it would seem kind of weird not to allow a healthcare company to be public. Yeah, let's move on to the next question.
Okay. Hi, both. Do you set a limit for yourselves on how many different stocks you own, or does it really just depend on the company or industry?
Dustin, why don't you go first?
Yeah, so when I initially started investing, I probably owned about 20 to 24 different stocks. And over time, and from Hamid, I've learned that it is more strategic to own less and just have higher conviction in the stocks that you do own. Right now, let's see, how many positions do I have? Right now, I have 13 positions, and that includes cash. So I still don't own that many stocks right now, but I actually would like to cut back even more here and own less. I did recently buy RIVN and EOS earlier this year, so that did up my position count from 11 to 13. So I would like to own less, but I don't have a specific cap or anything. It's just more of like where I feel comfortable in my gut.
Yeah, I also don't have a cap, but generally speaking, I'm in fewer than 10 things. Uh-oh. Did we?
I think we might have
Did I
lost
lose?
Dustin.
We lost Dustin. Okay, there is a storm going on in Northeast, so
the storm is over. There's it's the same thing.
Oh, you're back.
I never left. It's the same thing that happened to you before we started recording, where like Restream just like went a little nuts.
That is kind of weird.
Yeah.
Yeah. Anyway, so I don't have a huge cap, but I'm concentrated in very few stocks. Generally, when most of my uh, income was coming from work and my company, and my net worth was more tied to my company, I had more concentrated bets. I think more than 90% of my stock portfolio was in literally two or three things. And today, where I don't have income from other sources, uh, my entire portfolio is concentrated still on like six or seven different things. Six or seven.
Ready to move on?
Yeah, let's do it.
Okay. Hamid, what is your PE threshold? When do you start to think a company is trading at a premium?
This is industry specific. So, and also growth has a lot to do with it. So, for example, within the Mag 7, all of the companies are super large, right? Microsoft, Google, Amazon, Meta are all very, very large, multi-hundred-billion-dollar companies. And in those cases where they're all similarly sized companies, but one is growing way faster than the others, my view is that, well, the one that is growing faster should have a higher PE than the ones that are growing slower. And Meta, for example, is growing slower than the ones that are growing. I'm sorry, has a lower PE than the ones that are growing slower than Meta. So it's got the opposite. That's why I'm a huge fan of Meta as an investment. And I sold my Google, for example, late last year because it had already gone up and passed the PE of the others. So, and then in industries, in some companies where the growth curve is super fast and the companies are smaller, you might tolerate much higher PEs. So Robinhood is a perfect example of that, where uh, we're tolerating a very high PE, largely because of how much growth potential Robinhood has, and it might be able to sustain 50% growth curve for quite some time. And same thing with a company like Rocket Lab, which currently has a negative PE. It's not even profitable, but its growth curve potential is so fast that if you extrapolate what it might make, 5 years or 10 years from now, you can come up with reasonable numbers. So there isn't a specific PE threshold that I have. It largely depends on how big the company is. Has it already hit maturity? Is it in its infancy? All of those things have to be taken into consideration. Adrian, let's go to the next one.
We have two people asking about if you could talk about SoFi. Would love if they talked about SoFi. If they have a good earnings when the other banks didn't, that would be really exciting for SoFi.
Let me bring up SoFi real quick. I haven't invested in SoFi. I have thought that it's undervalued over the past couple of years. I haven't personally invested in it because I decided to become a SoFi customer first before I invested in them. And my experience with SoFi was relatively negative as a customer. And it was about the same time that I was looking at this company versus an investment in Robinhood. And I ended up deciding to just double down on Robinhood. Looking at their sort of fundamentals right now, so SoFi has a PE of 82, growth curve of 35% on revenue of 3.3 billion. Whereas, like, comparing it to Robinhood has a PE of 53, growth curve of 75% on revenue of 4.2 billion. To me, Robinhood today still looks like a much better deal than SoFi. So this is how I would evaluate it, and I'm not interested. Is what I would say to that.
And this is a good example of keeping your positions tight, right? Like, I think a lot of investors would look at these companies and be like, oh, Robinhood's a great company, SoFi is a great company, I'm going to invest in both. But because the businesses are so similar, you kind of want to choose one, or at least that's how we operate.
Yeah, that's certainly how I operate. I'm making more concentrated bets on fewer companies.
Okay, I think that is it for our listener questions.
Awesome.
Thank you all for joining us on the 24th episode of Buy Hold Rant. Please like, comment, subscribe, do a dance. I don't know. Keep it interesting.
Awesome. Thanks, everyone. Thanks, Adrian. Appreciate it.
Bye,
Thanks
everyone.
to everyone who's watching.